we're going to hear from Medusa Mining and the CEO, Boyd Timler. Boyd.
Yep, good afternoon. I'm Boyd Timler. I'm the MD of Medusa Mining. So just in the 10 minutes, a real quick snapshot of who we are, where we're at. So we're a small cap company, ASX listed, about 200 million shares on the market. Market cap right now of about 92 million US. We've got no debt. We're unhedged, and we're sitting on about 17 million in cash right now. One thing we just come off of, we're at the 11th hour of a 2-year expansion phase. So in the last 2 years, on top of our metrics, we've invested about $35 million back into our operation. We've self-funded that, and we've actually generated about $5 million cash on top of that at the same time. Our assets sitting down in Mindanao Island in the southern end of the Philippines. We've been in operation there for about 10 years. And just a snapshot of our history. We opened an operation 10 years ago with about 250,000 ounce reserve. We've produced about 800,000 ounces of gold in that period of time. We just redid our reserve resource in December. We're still sitting on 327,000 ounces of reserve and just about 1 million ounces of resource. So the nature of the deposit type, which is a high-grade epithermal vein system, we do replace as we mine year on year on. Just our last production history, the first two blue columns are in blue. That's our March and our June quarter of last year, and then our September and our December quarter. So on the red line there, just showing going from our June quarter of the previous year to now, we've now run 3 quarters in a row where we're producing grades about 20% better than we've done in the previous quarters. And that's really from getting on top of our dilution management, but also developing the high-grade materials that we're finding at depth with our exploration drilling. The other thing is, down at the bottom, our all-in sustaining cost has also progressively come down. For the half year, we're under $1,000 an ounce US all-in sustaining. And that's more true to an all-in cost, because that includes our expansion capital and our mine site exploration, as well as our sustaining. We've been successfully producing at about 25,000 ounces per quarter for the last 3 quarters. One of the things that we laid out about 2 years ago is we realized that we had to put a reinvestment back into the mining operation. So we had a focus plan. We upgraded the ventilation, the mine dewatering. We started putting in our new shaft, our E15 service shaft. Most of our expansion projects are completed, and we're in the 11th hour of finishing off our E15. We're actually at the 501 meter mark, and the bottom is going to be 506 meters. So we're actually 5 meters away from finishing the rock work, and then it'll be a month or 3 months to put in the hardware, and that'll be in production. The fundamental change of that is that will actually free up our hoisting capacity, or increase our hoisting capacity by 30% the moment that shaft is finished. So it's a game changer for how we can produce on a sustainable level. This is just a diagram showing the culmination of 10 years of development. So this is a bit of a bowl of spaghetti. It's 3 years, or a 3D isometric drawing of all of our levels. Just to show you the scope from there to there is about 1 kilometer, and we're down at about 500 meters of depth. We do about 25,000 meters of development per year. And last year we did a big drill off, so we did 50,000 meters of diamond drilling on top of that. So that's just the nature of understanding and developing this deposit type. Our big focus is finishing off this E15 shaft, so that frees up our current shaft, so it goes back to 100% skipping, which gives us 30% more capacity. And this is just looking at that same 3D view with the resource outlines of our main veins, and it shows that we're open at depth on a dip to the east. And there's enough real estate in that area to accommodate another 1 million ounces of gold. And we've got a lot of drill holes out in that area, but just not at a high enough density to actually call it a resource or reserve at this time. And that just covers off on where we've been concentrating our drilling. The purple is just our December quarter results. The blue is the September quarter and so on. So we've got economic drill holes down to level 16s, which is 1,000 meters below surface. We're currently at 450 meters. So there's enough real estate there for at least another 1 million ounces. And this is just from our December quarter. I've just posted the highlights of our just a regular drilling for our resource drilling. And the yellow column here is just the grades that we're receiving. And these are our normal quarter-on-quarter drill results from below level 8 and down. If you look at the numbers, there's more numbers that are more than 20 grams per ton than there are less than 20 grams per ton. I just pulled out the highlights from that quarterly drill out. So those are our normal results. So just wrapping up, for the December quarter, we did 25,000 ounces, all-in sustaining, just over $1,000 an ounce. For the half year, we've done 50,000 ounces, all-in sustaining below $1,000 an ounce. We've done that while we've done ventilation expansion, dewatering expansion, putting in a new shaft, doing a major resource drill off. Like I said, we've sunk about $35 million in the last 2 years, self-funded that, added $5 million cash to the position, and we're setting ourselves up to do a sustained 100,000 ounces a year, bringing down our cash costs, our all-in sustaining costs below $800 an ounce, and we don't need any primary infrastructure to be added with the known reserve and the known resource conversion. But we're open-ended for at least another million ounces with this deposit type at depth. So that's really just where we're at. The other thing is we're still, we improved our guidance just before December up to 85 to 95,000 ounces. Right now we're tracking and they're going to deliver at the high end of that guidance, if not slightly better than that. And the completion for the E15 shaft, as I said, the rock work will be done here before the end of April, which is in 10 days. And it'll take at least 3 months to put in the hardware and release that shaft into service. And that's really the Medusa story in a 10-minute synopsis. Thank you.